You guys kind of got it, but I'll piece it together a little bit more succinctly. We have a trading range and we have a spring. Automatically, we can already see, look at that rally to that rally. We come on down, we hold a high low from over here, and that's our spring. This is why we do not need to think in the classic Wyckoffian sense. All the information here is in the chart and it's easier to read. We can just see that the buying's getting stronger. We're making higher highs and we're holding higher lows and we get kind of a shakeout spring going up, which is what? Very, very bullish. Where do shakeouts occur? At the end of a trading range. We talk about this all the time. So this is textbook. This leads to a sign of strength. Very good buying into highs. This is our little backup action. It comes back and it's tested. Then look at this. Look at this drive up. Beautiful. We have a reaction here. Inability to test down here. That's strength. Then it all changes. We push an up. We gap up. We have an up thrust. Goes a bit parabolic. We react down, breaking the first support level. This selling wave is weaker than this. You can't compare these selling waves really, or these waves over here. Although it is stronger than this, and this, and this, I don't like to compare it because this is a new environment from this sign of strength in my eyes. Here we're still battling and testing the formation of this environment via the trading range. Here we're pushing up into a new environment. We gap up, there's no follow through. We come down, we get the strongest selling, preceded by the worst buying. Isn't that interesting? We look to the left, we can see it's halting on that large down bar here. And if it halts and comes down lower, what will the market be printing here? A change of behavior, which of course is bearish. And there's also additional information. This is a trend channel from the low of the spring. We cannot become overbought. We can apply an internal channel using the parallel from here and this parallel, where we do become overbought and then we get structural integrity. So you could label that bar with the internal semi-climactic. And then you could also draw the structure from here, pushing up as I have done here with a dotted line. And then you can see here that that wave actually breaks. So we're already in a cob. That is a cob of this trend channel. And that's our first rally, which is incredibly weak. You really need to pay attention to the structure here and what this market is hinting. And I see weakness. And what's interesting here is this is our length of line. Agreed? Within our trading range, we get a little backup. Have we used all of that energy? No. We haven't, have we? If the market comes down from here, you look at the chart, where do you think its first obstacle or target would be? Well, it would be this zone here, wouldn't it? 6,400, kind of like a VWAP zone, right? You can see a lot of trading through there. And then this would be our next target over here. So this would be target 1. That would be target 2. But there's more information. If we have a look at the size of the average true range, it's very unlikely that we're going to print a day like that. Agreed? Because we've already rallied up here for some of the day during the Asian session. If 2 was hit, this would be a big free fall, wouldn't it? It'd be great selling coming into the market. However, target 1 would be the logical place, this flat area. And we have to see if price got there, how does price interact, etc. And don't forget that we expect to see a bit of volatility if we do break through here, because we were breaking the demand line. Everybody understand what we see? It's kind of nice, isn't it, from a multiple time frame perspective? But like I said, here we have clean, succinct structure to work with. No guessing, no ambiguity. It's all here on the chart, black and white. And that's the kind of multiple time frames I use. So the basic thing is here, selling's improved. It is a cob itself from the internal channel. Buying has deteriorated dramatically. So the worst buying occurs after the best selling. Now ask yourself, was that bullish or bearish behavior? Well, it's bearish, isn't it? Let's see what the market does.